the bar's higher. Um, Educating makes you learn it better, right? So if you're just kind of learning something on your own, there's a tendency where you'll get like 80% of it and you'll be like, and the other 20% is kind of hard. And you're like, I got what I need. It's good enough. But if you're teaching it to someone else, you really like are now like have a strong catalyst, a strong incentive to make sure you master that other 20% as well. Because you want to, dot all your I's and cross your T's and make sure you're doing it properly. And so kind of like how like going to university, even though the research might be available online, having to do a test is a good incentive to do well. What educating is also arguably an even better incentive to do something. So it kind of forced me to dig into little corners that I might have otherwise missed. Um, and I think, I mean, the biggest takeaway from me was like probably how speed matters for money. That was go down, which can include government bonds. Basically, instead of letting them default or otherwise have a disorderly thing, they just print more units. And so that's still a key thing is funding the sovereign. And we saw it. I mean, as recently as 2022 during the UK gilt crisis, they had a major problem with their bonds, and the central bank, Bank of England, they had a speech plan about balance sheet reduction, and they literally canceled it and increased their balance sheet to fix the bond market problem. And then, that was a temporary thing. They eventually went to balance sheet reduction after they kind of cleared the leverage out of the system and kind of bailed it out. But the point is, they can step in whenever there's disorderly bond issues, and they can kind of choose what is the release valve going to be. If the government's spending too much money and funding the sovereign is one of the apps, like the top
Mm.
two or three things that they do.
Would you say to the other points that they're raising, is there any merit to this? Like administering or managing the economy. So, or would you say it's all sort of yeah, also a consequence or ramification of them being there in the first place? Or is there any merit to the other arguments why central banks are around and what their sort of task is?
Well, before the kind of the modern era, so the post global financial crisis, they weren't necessarily funding the sovereign too much. Basically, after World War II ended, there's this long stretch where we didn't really have a lot of central bank directly funding of the government. Instead, it was more like managing these private sector credit things. Now, the big criticism is that they cause those were worried about outages and stuff. So they front ran liquidity into the market in the late 1990s. And that contributed to the dot-com bubble on the upside, combined with the exuberance of new technology and everything else. So they weren't the only cause, but they just poured some gasoline onto the already raging fire. And then as the recession happened and as the dot-com bubble melted and everything, in something like 2001, they came out and cut interest rates all the way down to 1%. I think a lot of it is the sacrifice of the long term for the short term, which again they wouldn't agree with. But basically, they're always kind of putting out the current fire. So it's like if there's a
Yeah,
recession, it's like
the
the main thing is
arsonist.
get out of
Yeah.
the recession. If it's too hot, it's like suppress it. And basically, what they're always trying to do is make sure that total credit keeps going up. In my recent talk at the Bitcoin conference, I pointed out that in like 100+ years of history, there's only been 5 down years in the amount of total credit in the U.S. 4 of them were in the Great Depression. One of them was a 1% drop in 2008, and they just find that completely like impossible. So they just jump in and make sure private credit. Most economists don't think that price controls are good. That the market should set prices, and what central banks do is they set the price of credit, and kind of more fundamentally the price of money, but basically the price of credit. Um, and so their decisions, a small group of individuals, has rippling implications for the entire market. And every time they're wrong, that can affect millions of people.
Mm.
It's price control the most important thing.
Yeah, that's true. I mean, one of the underlying rationales for me is also, that they want to solve problems in the real world, and they really see themselves as a problem solver, even though sometimes they are the arsonist that sort of keeps the fire going or makes it even bigger. But then, I mean, it's really like thinking through this lens that they're fighting.
You risk getting people in the streets. Either they vote you out if it's a democracy or republic, or they riot if it's some sort of monarchy or something. If it becomes intolerable, and so they don't really like to transparently do this. They like to defer the costs, make it invisible, and you figure out years later what happened. Uh, and the older technology to do that was literally debasement of coinage. You take the money that you're getting from taxes, which is you're still taxing, but it's not taxing enough to do what you want to do, which is go war against the other guy. And then they melt it and they, reduce the gold content or silver content by like 10%, and then they are able to make 10% more gold or silver coins, and then they spend those in the economy. And initially, they have like the same purchase value because people have this kind of unit stuck in their head, and they have certain wages and contracts. You like this is not free. Um, and most people say, "Well, no, I don't want to pay for it." And so by basically just kind of running a deficit and then later monetizing some of it, it's something now we're talking about the deficit, but now all those people that made those decisions are out of office. There's no consequences. And so what the basement does, and fiat currency in particular does this, is it just kind of pushes the problems onto the next set of politicians and the next set of voters and says, well, they can untangle what happened later. They can argue about whether it's Trump or Biden causing inflation, and we can ignore the fact that all this public ledger was put on, all this debt was put onto the ledger by like Bush, because that like, figuring out how to like settle with every other bank, it's really helpful for them to just have an account at like a super bank and be able to be like,
Mhm.
okay, well, credit this and add to them, and it takes 2 seconds. And so you know, like the speed of commerce increased, and it started before the telegraph. It started with things like the printing press, just general faster communication in general, but printing press, the invention of paper, basically more affordable ways to make various kind of ledgers, more or less. That sped up commerce, so they all wanted to basically have these efficient ways to transfer stuff, and so they can come in, swoop with a problem, and say, "Well, this consortium of banks, now endorsed by the nation state, is like they'll be your big settlement ledger to help this go a lot more smoothly," and it's solving, um, whether it's supporting one side in a war, whether it's running a stimulus program that they claim kind of has no cost to it, or it's not a big deal. Um, by kind of deferring consequences, big or small, it just kind of gives more power to politicians.
Yeah. Yes, I see. Some Bitcoin, like the flip side to all of this is obviously, and some Bitcoiner argue that way, is that a further Bitcoin adoption would make fiat debasement less probable, and then sort of everything more transparent, costs more tangible, more direct, and thus war less likely in this more Bitcoinized world. And so theoretically, this sort of makes
Completely invalidates the existence of fiat currency, or if it takes like half of it away, by basically constraining them more, by giving them a much faster alternative that people can go to. Um, and that remains to be seen. We already the closest thing we have today is like dollarization. So if a country just manages its currency terribly, people dollarize from the bottom up. They find ways to get dollars and other assets, and they just everyone learns you just can't hold currency and bonds of this country, and so that country massively loses a lot of its seniorage. And then extreme examples, the nation state itself will give up and just say, okay, we're gonna
place, government debt in and of itself would really have to change, or at least like the status, because like that's something we researched in the book extensively as well. And it really dawned on me when I was doing this that like government debt, even though it's debt and it's a liability, it almost feels like it has this asset status, and there's like economists from Germany, Heinrich Rittershausen, he has like really written about this extensively, saying it's so weird, and even like in some sort of magic trick that happened here, that at some point government debt became really an asset, so to say, and now then obviously got this reserve status. And so I don't know if you have.
kind of the release valve. So as they
Mm.
fail to agree with each other on how much to tax, how much to spend, the error this gets kind of invisibly debased and argued over, and kind of the impacts happen with a delay. So I think nothing short of a forcing function is needed, which is basically it's going to keep happening until something forces them otherwise. Which is to say, until there's something really powerful in their face, like Bitcoin is 10 times bigger than it is now, or something. Um, they're going to keep doing it.
Yeah, I see. I mean, obviously, bonds are also traditionally viewed as a safe haven in times of war and just turbulence and stuff, And I think you just recently posted that with this last sort of hiccup that we've seen, like the strength wasn't particularly great, in terms of like money flocking into government bonds. And I know you're not a doomer or a crash prophet, and so I mean,
Basically, they're issuing newer bonds and they're retiring older bonds prematurely. And so that there's no net money added to the system. Uh, and so I think overall it's getting more attention than it should. It has, not to say that it's irrelevant, but it's kind of being overly focused on. But the implication that it does have is part of why treasuries are going back to the prior question. How do treasuries get to the heart of the system? It seems kind of unintuitive. It's because they've been like the biggest, deepest, most liquid market, compared to most other things. It's also, I mean, the dollar itself is a very deep and liquid market, and then treasuries are a very deep and liquid market. In recent years, that's becoming
Like, subscribe, and turn on notifications. Support the channel by liking this video, subscribing, and enabling post notifications for more content on crypto and digital assets. Check out our other videos and share your thoughts in the comments below. Your engagement helps with the YouTube algorithm and keeps the content coming. Thanks for your support. Enjoy the video.